Today, you and I are going to have a lot of fun because I'm going to share with you this really nice scalping strategy, and I know you're going to love it. And not just because it's a great strategy that you're going to make some money with, but this is probably one of the best, if not the best trading strategies that I have ever seen for any of you that are trying to rapidly grow a small account, or any of you that don't have a lot of time to devote each day towards trading. And definitely, this has to be one of the best trading strategies for anyone who's affiliated with a prop firm and trying to pass a combine. Because not only do you need to make several thousands of dollars to qualify for funding, but you also have to prove to the prop firm that you are a consistent and disciplined trader, and this trading strategy can definitely do it for you. And I would know firsthand because this just so happens to be the very first trading strategy that I ever learned when I started trading back in 1999, and I'm still using it to this day. So I've spent roughly 9,125 days perfecting and honing this scalping strategy. And I have absolutely no doubt that once I share it with you and you learn it, you will have no problems whatsoever executing it for the next 9,125 days of your trading career. Now, the scalping strategy I'd like to share with you today is something we call the Padder Scalp. And it got the nickname the Padder Scalp because we like to use it to pad up the balances of our account, especially in the beginning part of the month, then take those gains and leverage them against other trades. So I know that no matter where you are currently with your trading journey, the power of the Padder Scalp can get you to that next level as a trader. Now, unlike other scalping strategies that require you to sit behind like 45 or 50 monitors and smash on hotkeys all day long, you don't need to do that with the Padder Scalp because it has a very unique nuance to it that makes it effective. In fact, most of the candidates that qualify for a Padder Scalp, you're going to know who they are the night before, so there are no surprises. And the execution for this strategy happens at a very specific time, within the first 15 minutes of every market open, so it's almost impossible to mess this thing up. So what I'm going to do today is share with you the ins and outs that I've learned and honed and perfected with this Padder Scalp strategy in the attempts that it gets you one step closer to where you need to be as a trader. So let's go ahead and get started. Now, before we get started, I want to let you know I got some good news for you. I decided to shoot most of this video through the market open. That way, you can see a Padder Scalp play out in real time. So the lessons I'm going to show you here on screen, we're going to apply those principles in the pre-market, prepare for the trade, then execute it. So win, lose, or draw, it'll all unfold right here on the screen, and you'll get to see how this thing works. So on the screen, real quickly, we have a series of steps. Now, it's important that you understand steps 1 and 2. And go back and watch this video a dozen times, 100 times if you need to, because this is what gives this strategy its nuance. Like I said in the introduction, there's a very specific window, and that's what makes it so effective. And it starts with the first two. And the first two is step number 1, we're going to look for a daily chart breakout or breakdown. And I'm going to show you these in charts. So we're going to run through these here real quick. It can be slightly broken out or it can be slightly broken down. But the daily is what narrows down our candidates. Now, we're going to use 1 minute or 5 minute charts for execution because it is a scalping strategy. But the key and the nuance and the shenanigan trick that makes this work starts from the daily. And you're going to see something real interesting here in just a few minutes. Step number 2, we're looking for an open move that is very fast. And I kind of capitalized fast because anytime you see very aggressive, very fast move, fast candlestick, let's say, it's always a sign of emotion. So when you see fast speed, it equals emotion. The more speed, the more emotion is baked into that. And again, the abandonment of intellect, right? There's people just piling on, retail traders, and they're just FOMOing. You know where I'm coming from when I say that. Step number 3, the entry will be at a support or a resistance with a first red or green or even a wick candle. So to get the concept, we're looking for a fast, speedy move up, speedy move down, but we're not just going to blindly buy or sell into support and resistance. We're looking for a very specific candlestick formation. Actually, just 2 of them, either a wick or an engulfing, and I'll show you. Step number 4, our stop loss will be below that candle or below that wick. Again, I'm going to show you this in real time. And then the target, because it's a scalp, we're just looking for about 50% of the move. Now down here towards the bottom, I drew a couple of charts that what these would probably look like so you can start getting your eye focused. And it's real simple stuff. We're looking for a really strong move. I like between 2 and 3 big candles on a 5-minute because I normally trade from a 5. That's just a personal preference. 1s are great too. But if you're doing a 1, just double it or maybe even triple it, right? You're just looking for a very aggressive move, a very deep in the range move. And then we're looking for some sort of candle that retraces the last red by roughly 30 to 50%. 30 to 50%. It could be 2 aggressive candles, 30 to 50%. And we're looking to execute at that 30 to 50%. Stop goes below each one of those candles. If it comes from a wick, like the John wick, this is what it will look like. It can actually just retrace about 30 to 50% of that after a big candle. Now, they have to be sizable candles, not these little tiny ones. Let's just say like that. They have to be sizable candles. And this move has to take place at a support and resistance. If this happens in the middle of the chart, your ass is cooked. Don't do that. You might be catching a falling knife. It's very important because there's a layer of orders down there, and that's what we want. And I drew these over here. It would be the same principle in reverse. You're looking for parabolics, a sell, a stop, or a wick, or something like that. So that's the principle. Let's move to live charts, and I'll show you what this looks like in real time. As I mentioned there in the video, we're looking for a chart that is breaking out or breaking down on a daily time frame. It also can be slightly broken out or slightly broken down. Now, one of the reasons this trade works so well is because there's this little shenanigan trick the market's been playing on people as long as I can remember. And that's right before it's ready to break out. They just got one last algo to kind of stick it to you. You know what I'm talking about, right? Have you ever traded a breakout and it's like, hey, this trade looks great. 30 seconds later, you're like, wow, I'm getting cheesed. There's a reason that happens. And there's a specific time that happens, which is in the morning. So I want to show you this first. You probably have seen this and you might not know what to do with it, but it happens just about everything that you're going to see. Let's go back and look at the NASDAQ right here on the daily. And you're going to see right here is the breakout level. Now, again, I might not have said this. I can't remember what I just said, strangely. But one of the reasons that breakout trades don't typically work for people is because they don't understand what a breakout is. And a breakout is a multi-time frame event. You have to have a large frame that's breaking range along with a shorter frame at the same time. Otherwise, you're just looking at momentum, and momentum has a tendency not to sustain itself as well. Here's the key. Take a look right here. And if you put yourself in the mode of a trader, a retail trader, they're probably thinking, oh, the bottom is in. This thing's going to go. And you'll notice that right towards the open, it looks like it's ready to break out. And it kind of just dips right back into about 20 to 30% of that candle. You see that? It kind of slides there first, then closes back up there. The next day, the same thing. You notice there's a slight back test right back in there. Then there's this enormously large candle. So everybody here again at this point, oh, wow, this thing's on fire. I don't want to miss. But look what happens. Again, you'll see there's a wick that digs right back into what? 20 to 30% of that candle. Notice that? Another candle here. What are you digging back into? 20 to 30%. In fact, if you look at every candle, every single day while this thing is going up and quote unquote, it's rallying, bullish, whatever you want to call it, it's dipping every day. There is, in fact, a pullback. And that's the opportunity that you're going to take advantage of the Padder scalp. Now move your eyes a little further over to the right and you'll see this inverse relationship. You start to see a very aggressive candle. Oh my God, market's going to crash. Doom and gloom. This time is different. Get your soup cans and backpack and head for the hills. What happens the next day? It bounces. You care to take a guess on how far that bounced? 20 to 30%? Huh? Right? Then it's sold off. Next day, tries it again. And then you get even more aggressive. But you're seeing the same thing. Before something really breaks out, there's always a pullback. There's always an early morning shake. Now, we're looking for that move. That's step number 2. We're looking for that move to be very aggressive because it has to be aggressive. because aggression is speed and speed is emotion, right? So anytime you see speed, huge candles, just think there's a lot of emotion baked into that bad boy. And what happens, right? We say emotion is the abandonment of intellect. You start getting emotional, you're going to really kind of lose your way. And you'll see this here. I'll show you an intraday chart to kind of draw your attention to what it is that we're looking at. We'll go to a 5-minute right here at the top of the screen, and you'll see it. If this dip move happens in the morning, like take a look right here, you see that? And up it goes. Right here, and up it goes. Right here, and up it goes. And if I can kind of move that back just a little bit, I want you to take a look at where each one of those happened. So you start out strong, right? Looks like it's going to break out on the daily. It's all in, right? And what it does, before you get here, you get this, right? You see it starts right from the open and just straight down. Now everybody's in a panic. Oh my God, it's a failed breakout. And they're just smashing buttons, right? That's your secret. We're looking for step 2 here, which is a pivot, a wick, engulfing candle, or some signal to show that this support is going to hold. And I'll show you this in a second. Again, next day, it gave it to you again. Same instrument, 2 days in a row, right here, right off the open. Oh, look, this thing's all high. I must have got faked out. Better buy it. What does it do? Gets you again, right from the open, drops right down here and then bounces. Where did that bounce? At the same spot. Day 3, the same spot. You're seeing this, right? Every day you're diving right into it. Now I did a strategy, the check mark. The difference between the check mark, you can go back, look at the John Wick. It's all kind of the same theory. They're just different targets, different moves, and different thoughts of what you're trying to do with your objective. I just want you to see that. That's what you're looking for, is that very large move. Now we want to look for a reversal candle, and I want to show you a series of what a reversal candle would look like, or what it is that we are looking for in a couple of different setups. Now, if this video moves a little too quick, or I'll give you a great training tool, you can always go back and look at these, right? And just look left. Whenever you see a pivot, just magnify it, look, and you'll see what I'm talking about. 2 types of candles. You have my favorite, or what I look for, I'll draw them for you, is if this is a red candle, we are looking for either a green candle, right? To take out, like it was drawn, about 20 to 30%, maybe even half, or you got the wick where it's retraced, and you'll see it right there. The wick was retraced. Let me see if I can even open that up a little bit more, right? You'll see it right there. There it is, right? Wick retraces, up it goes, okay? And that's what we're going to look for. Now, what I am going to do, and of course, let me just make sure I say this before I start. Entries are down here, stops are here. We're not looking to trade this whole move. It's nice if you catch it, you can, but we're just looking to scalp that every morning, because this move has to happen in the first 15 minutes of the day. Very important. It has to happen in the first 15 minutes of the day. So what I'm going to do now is just wait for the market to open, see a few of these candidates, and pick one of these up for a trade. Looks like we got NASDAQ here that's going to do the goods. So you're already down here towards this 20,430. You got the 2 big candles. Perfect. Look at the wick starting to develop. Let's see, maybe we can pick up 20,414. I'm going to put an order in here just in case it dips there real quick. And what we're going to be looking for is that wick. See how the market comes in and supports this trade. See if they come by and pick it up. We'd be pretty sure they would. Oh, that's aggressive. I'll see if they get a fill. Yes, we're in. All right. Now what we want to see is, can you hold? We can put the stop underneath of the pivot here. Yeah. And let's see, just about 30%. There's 30% right there to 50%. That should do it. Now you have a couple of different options here. I went in earlier because I've traded thousands upon thousands of these, and I know when I see what I see and when I should react. This is probably going to bounce. We'll look for this area up here for the target, but you could wait for the next green. You could wait for 50%. You'll trade a few of these, you'll figure it out. But I see this a lot, and you're seeing that wick. The more times that wick keeps holding up, the better this is going to work out for us. So let's see if they just keep supporting this trade and holding this trade. And yeah, that's what we're going to do. Stops will be underneath of that. Target's right there. We're just looking to scalp this out. So I kind of jumped ahead here for the sake of time. So the red line that I've drawn is the 50% barrier of that big candle. And now you've got a green. So this is the long right here. No matter which way you want to dice it, no matter where you got, that's the signal. You've got two of them there. You've got the green candle. You've got 30% of the big red bar. This should bounce. This should give us exactly what it is we're looking for. It should retrace at least 50% of that measured move from the very top of that candle all the way down to the bottom. As long as that buyer at that wick keeps showing up, this trade's good. So again, for the sake of time, because I'd rather explain this to you more in detail, that's it. That is it right there. You see how it looks? Wick, green bar. Now you're following up. We should here get our order filled. And I'm going to go back through this here, rewind the video a couple of times so you see what I'm talking about. I know this is happening quickly, but I want to just kind of go through this real quick. Was breaking out pre-market. Market opens, rug pull, traps the longs. Immediately panics down into a pivot from the previous day. That was the key, the pivot from the previous day. And as soon as it hit that, it was like a launch, and there we're filled. You'll go here, 14:30. What was that trade? 10 minutes? 10, 12 minutes? 14:30, 10 minutes. Every day, all kinds of instruments. So let's take a deeper look at this trade. Let's rewind it and really focus on what happens, because it does not matter what I made. What matters is that you understand what this is and you can make the money with it. That's all that's important is that you can take this strategy and rely on it every day and make some money with it. So let's start at the very beginning. We were breaking out in pre-market. This was a daily chart test of a resistance, and you should never buy at resistance anyway, but this is how the trap is set. They're getting everyone thinking, oh man, I better get in on this. Today's the day of the NASDAQ. And as soon as the market opens, that's the key. As soon as the market opens, it's just sauce. Every chaser got cheesed. And one reason it gets so aggressive is because they panic and they start stopping, creating more sell orders, and down it goes. Now, let's take a look at this level right in here. This is the area that we are looking at. That was the previous day's pivot. So you'll notice that there was one right here and also right here. Now, again, why we need the signal is because you blew right through it here. So if you just blindly jumped in on the first one, you got smoked. If you got down in the second, it was okay, it was better. But you can see because it was moving so fast, you really need at those earlier levels confirmation. Now, once you got down here, one of the tricks for jumping in a little bit early was the measured move. I didn't mention that during the actual trade, but I want to go over that. I went over this before in a couple of different segments, but I live and die by the measured move. Real quickly, not to take up a bunch of time. If you look at this move from the very base here to the very top, this is roughly 20,275 to 20,442, right? So you've got what, 150, 160 points. So the NASDAQ can give you a consistent 160. As you start to get to the top of the measured move, you start to get a little bit short-term overbought, and there's probably a pull. Now, if you look at this move here too, you got roughly 20,600, right? 20,600, and you go straight to 20,442. So you've got about 160 there. It's already past measured move, and that really increases the odds of that bouncing. Again, the more you trade this, the more you're going to figure this whole thing out. So from there, I want you to really pay attention to this. As you get down there, there's where we put our order, but take a look at this. Take a look at this candle. I'm going to Flip it back and forth. Sorry if it's giving you like seizures, but you see that? Now, I want you in your spare time to record some of these moves and look at it and just keep playing it back over and over in your head. You see it? That's a buyer. I mentioned this in the John Wick video, the John Wick strategy. If you buy into that dip and you retrace that red, that's what happens. And of course, it eventually comes up and hits our order right there. And it was a little bit short of the 50%. And who knows? I mean, sometimes these things will actually retrace all the way back up to the top. And look, as I said earlier, it's just so you understand. If you walk away from this video understanding the power of this wick, the precision of the move from the very open, the aggression, into a specific level with the strong wick or a reversing candle, you got most of it down, okay? You can make hundreds of trades off of that. So for example, could I have done 2 or 3 or 4 of them and then paired out and let it run for the rest of the day? Sure. Do whatever you want to do. I primarily use this one for a scalping strategy and a little slower version for something that I want to hold. But I think you get the point there. You understand. So in closing, I want to show you a couple of different charts so you see how universal it is. You've got, for example, this crowd. Again, look down at the daily. You were just breaking out. Starts with what? Sell off in the morning. Nice little pop there. Actually, you got a little secondary one right there, but there's cash flow in that trade. We've got Dell. Again, there's just so many of these every single day of the week. Dell, D-E-L-L. There it is. Same thing. Breakout. What do? Right back in, right down early. Touches the pre-market low, post-market low. Rallies back up. Some pretty nice cash flow right there. NVIDIA. The king, right? NVIDIA, same thing. What do? You gap, you start right with the day. Now, some of these don't get as aggressive as the NASDAQ. You're not playing with as much range, but that's okay. As long as you're pulling aggressively in the morning, you're going to create the same kind of emotional scenario. And I believe Amazon was another one here. So, I mean, I could go on all day with these. You're going to see them everywhere. Breakout on the daily. What do? You sauce everybody right at the open and look, you completely check mark on that one. So some are going to work well. Some are just going to be for cash flow. It doesn't matter. The trade works. Now, if you're brand new, you're like, you're really struggling to find them. I'm going to show this to everybody here. Here's a list of tickers right here. Screenshot it, whatever you got to do. I promise you, every single day, for the rest of your life, one of these will give you that move every day. You can put them on a watch list, save yourself the scanning, and just go ahead and buy into the red. Watch it. Tell me what you think. And when you study that, remember, we start from the daily. We look for an aggressive move at the open, either up or down. Has to hit a deep level of support and resistance, has to create the panic, has to hit that. We buy on the first green, we buy on the wick, we buy on the first red, we buy on the sell. Stops underneath, targets about 50%. Take time to go back and look at these charts. Look left. Every answer to every question you have, just look left and you'll start to get your answers. Now, if I happen to leave something out, go ahead and put it down in the comment section or just reach out to me at any time. I'm pretty easy to get a hold of. On that note, I want to remind everybody that I'm going to be doing something new. I'm going to add to the rumors.com. You can see it there on the screen. But every week we produce a watch list, a bunch of setups like this. You can save yourself the time. It's absolutely free. I'm not charging anything for anything, okay? But I'm getting a lot of questions here on YouTube, and I want to make sure that I get them all covered. So I'm going to start doing a private video. It's free, guys. It's free. Explaining the strategy a little bit more in detail, because when I do these YouTube videos, I like to keep them around 20, 30 minutes tops. These will be kind of following up, answering more of your questions. I'm a human being. I make mistakes. I leave things out. I forget to maybe make myself clear sometimes. So I'm going to take each one of these strategies and go into them deeper each week. And I'm going to start producing that video. Right there's a link down in the description box. There's also a link probably posting on your screen. Just sign up for it. Totally free, not asking anything for it. So anyway, guys, I hope you find the true value in the Padder Scalp. I hope you enjoyed this video today. It's been my pleasure. Take care, trade well. I'll see everybody soon. Cheers.